Voting. Yay. Want to talk with you today about what you should track as a loan officer. Right? We talk about goals, we talk about metrics, we talk about KPI, that stands for key performance indicator. Because basically, I was taught many, many years ago by a great mentor of mine, if you do what's needed, then the money will come. If you prospect correctly, you'll get clients. Yes, you have to say the right things. You have to know what you're doing. There is a method. However, I'm going to give you part of that today, right? What should you be tracking? So, and if you track this, you're going to know exactly where your business is going, exactly where you are in your business, which is so important. Because if you don't know where you are in your business, you guys have heard me talk about this, right? If you don't know where you are, how can you get to wherever you want to go? Hopefully you know where you want to go. Hopefully you have goals, you have a plan. But it's important to know what to track. So here's what I'm going to share with you today. 3 things you need to be tracking in your mortgage business. Number 1, leads. How many leads do you get a day, a week, a month? Simple. Just 3 things, right? First one's leads. Second one to track, second item to track for key performance indicators is pre-approvals. Pre-qualification, pre-approval, whatever you prefer to do, whatever your realtors prefer you to do. Pre-approvals. So of those leads, how many are you actually able to pre-approve? Is that skill? Is that your variety of loan programs? Whatever it is, you need to know those metrics. They're important. So, 1, track your leads. 2, track your pre-approvals. And number 3, last but not least, track your originations. Okay? Of the people that came to you, how many could you approve? And how many went to contract and closed? Right? Origination to closing is number 3. Super important. If you actually keep track of those stats, you'll know what to track in your business and you'll be able to predict your business. Right? If you had been tracking this for the last couple of years, you would know exactly where you are in your business, where you're going to end up for the month, where you're going to end up for the quarter. And when you know that, you know what you need to change to do about it, which is the most important, right? Because if it starts with, you don't have enough leads, okay, you don't have enough leads. But if you have leads and you can't pre-approve them, that's not going to help you, right? What's the quality of your leads? Super basic, those 3 key things. So make sure you're tracking those. And then what's your audience, what's your client rapport like? What are you able to do? So, because if you don't have that dialed in, like you're getting leads and you have the loan program for that borrower, but they're not going to contract with you, then you have another issue, right? So if you track those key performance indicators, again, it's leads, number of pre-approvals, and who goes to contract, right? Just those 3 key performance indicators, you'll have a much better idea of where you're going to go and what you need to correct it if you're not on the path that you want to be. That's most important, because if you know what you're missing and any of those 3 steps, then you know what to correct, right? So if you're not getting enough leads, just get more leads, right? And then if you're getting leads but you can't pre-approve them, it's the quality of the leads that you're getting. And then of course, last but not least, if you have leads, pre-approvals, but they're not going under contract, something else you got to fix there. Either loan programs, your sales skills, your closing skills, your rapport, your professionalism, your follow-up, whatever the case may be, right? So, as always, cheers to your success. I hope that helps you. See you soon.